Welcome back. Well, there has been a lot of uncertainty pertaining to South Africa's economic outlook. This due to various factors that expose the GNU's dissents following the postponement of the budget speech announcement and a delayed budget vote. Now, what does the South African economic future look like? Razia Khan, chief economist at Standard Chartered, joins us now. Thank you so much for your time, Razia. Before we get to the details of the budget that will determine the growth path, of course, we can't ignore the political disagreement. So let's talk about that political uncertainty amid the legal action against the budget. What's your reading of that impact?
Well, the legal challenges to the process behind the passage of the fiscal framework. And there's an expectation in markets that as much as there is political discontent with the way things are done, everything was done in order with the set procedure, and so very little might come out from those legal challenges. The more worrying aspect for markets is what all of this means for consensus building and for the holding together of the government of national unity. Let's not forget that a significant part of the market rally that we saw in South Africa in 2024 was the very quick formation of that GNU and the expectations that this would lead to growth-based reforms, growth-focused reforms, that every single member of the GNU was under pressure to deliver faster growth, greater reform, in order to satisfy their own political constituency. All of that is now being put to the test, and markets do not like uncertainty.
And indeed, we have seen now the markets, the local markets succumbing to the twin pressure of the Trump tariffs and also the uncertainty regarding the budget. Well, let's get to the details of the budget, and particularly looking at revenue and VAT being the contentious issue here. VAT is seen largely as the easy win, the easiest win that the Treasury could have taken. But then, of course, the DA saying that we didn't need to do that. And actually what we needed to do, instead of looking at the revenue line, we maybe needed to look at the cost line and cut out inefficiencies. What has been your analysis of that, and really the ideal path to follow? Is VAT the ideal path here?
First of all, markets will always reward certainty that much more than they will reward maybes or uncertainty. So it may well be a valid point that there is room for some expenditure cutbacks, but the process of trying to investigate that and trying to follow through and actually making those spending cuts will take a while. And markets are certainly impatient for faster progress. South Africa's immediate background, the accumulation of higher levels of debt, years of growth that wasn't necessarily going anywhere, years of not being able to deliver on the aspirations of the people who are impatient for change, these matter a lot more. And in this sense, something needed to be done that was fiscally stabilizing, while still allowing the room for this greater redistributive element of spending. Markets, from that perspective, have a clear preference for there being a tax measure of some sort, a tax increase of some sort, to be able to drive that immediate revenue outperformance with some degree of certainty. Now, on the issue of which tax measure, this has been looked at extensively by almost everyone. South Africa, prior to this, had seen many years of increases in personal income tax. The concern that an increasingly smaller tax base was being burdened by greater levels of taxation. And even when tax rates were increased, they didn't necessarily yield anything. South Africa's corporate income taxes are higher than the OECD average, and raising corporate income tax further is not necessarily how you attract investment. From that perspective, a VAT increase remains the least distortionary of any potential tax policy choices.
Well, let's actually talk about the allocation of capital here and really the spending. And I think for a long time, people have been concerned that in South Africa, we are spending to redistribute wealth instead of actually spending on things that will actually sustainably boost the economy, like infrastructure. Have we struck a balance this time, or are the scales still unbalanced?
It isn't necessarily an either or choice. If you inherit an economy with a high degree of inequality and you want to create the conditions for economic growth, for economic inclusion, then there is a necessity of some sort of redistributive social spending.
Yeah.
Always take care of the most vulnerable, and that doesn't in any way get in the way of the economy to grow. So it's something of a false argument that the only way that you create greater room for the infrastructure spending, for the capital expenditure that the South African economy also desperately needs, is to cut back on the social side of things. What South Africa can do, and what is well within its abilities to do, is to cut back on this perception of the economy as a high-risk economy with weak growth prospects, bringing down the country risk premia that investors otherwise demand. And that in itself could lower debt service costs meaningfully and could create the space for capital expenditure, growth enhancing infrastructure spending, the ability of the country to export more. It isn't necessarily a choice. It's not one or the other. It's about being able to do everything that might bring about a more positive outcome in the medium to long run at the same time.
Yeah. Now, Razia, just as we wrap up the conversation quickly, because I mean, all of this is so that we can get to that forecast this year, at least that Treasury has put forward of 1.8%. That's triple what we achieved in 2024. But I'm wondering if, what kind of risks the Trump tariffs actually present for us to get there.
Big issue, but South Africa fortunately has a track record, even against recent years of very dismal growth and negative growth surprises. Let's not forget 2024 and the impact of the drought. Despite that, in the fiscal year that has just ended, there's still some revenue outperformance relative to target. Okay. That is the good news, that even against a very difficult economic backdrop, it isn't necessarily the end of that revenue effort, and there's still some room, maybe with tax administration improvements, to try to see better outcomes. But also, let's not kid ourselves. There is a great deal of economic uncertainty on a global level now. The retaliatory action that we now seem to be seeing from major trading partners, some major trading partners of the US, does considerably change the global growth outlook. It impacts everyone, and it will certainly impact prospects for an open economy like South Africa.
All right. Well, we do have to wrap up the conversation there. Thank you so much for your insights on that, Razia. Of course, we'll be still keeping a close eye on those developments as the uncertainty unfolds when it comes to the budget and the GNU. That was Razia Khan, Chief Economist at Standard Chartered.